All right, Todd, let's get into the numbers.
Thanks, Nick. Appreciate it. Thanks, everybody, for joining us today. Just a quick shout. I will have posted today in the Facebook groups the month end for December. It's all done, ready to roll. And also a year end analysis and comparing 24 to 25, and also a forecast on what to expect for 26. So today, welcome, January 12th. Here we go. Across the board, we have 85 days closed on market, a 3.7 month supply. Absorption rate is at 27.02. Average list price this past week, $776,235. Average sale price this past week, $684,115. And our list price to sale price retention last week was 96.67. Active inventory dropped to 23,692. Pending is sitting at 3,211, and closed units month to date for January at 1,216. Looking at new listings taken, not bad, 2,357. People are definitely held off until January 1st to list their homes. So just in the last week and a half, we've seen significant increase in new listings. Days on market is at 92 days for active inventory and 85 days for closed. In the lower left-hand side, our price ranges show that the decline or the contraction of each of the price ranges happened in the under $800,000 market. Everything beyond that, of course, did not decrease, which means it increased. So that brings our total inventory 0 to 600,000 at 67.65. And what that red means is it just means that number is less than it was last week. 600 to $1 million homes at 18.41% of the total inventory, and $1 million and up product at 13.93. So here's the spreadsheet. Taking a look across the board, new listings taken at 2,357 as described, up from 1,543, thankfully. Last year, though, look at this, same week as this week, 1,452 in January of 25, which we thought was going to be a good year. Well, it was, but 2,357 is significantly more than that. So sellers are definitely re-engaging already this year, and only 1,687 the year before that. Taking a look at active, we're at 23,692. Yes, it would be nice to see that a little higher. It may come higher. We just had a really good run on it this past week. But again, we're about 10% ahead of where we were last year. Notice that big change right above the minus 0.7% in red. You'll see 8.72, and then that salmon-colored line going over to 2025. And those numbers represent what took place year over year back to 2025. And so we've been looking at that number being as high at the beginning of last year as 30%. But over the 2024 and 2025, we increased inventory dramatically. So we're now about the similar kind of numbers as we were last year. So that isn't going to be. So inventory is not going to be a big issue in 2026. Inventory is going to be there. At least that's what's anticipated. Taking a look at pending and under contract accepting backup offers and contingencies, we're at 3,170 in escrow right now. Again, we look at this number as we do listings with sellers being interested in engaging. Well, we look at pending as buyers engaging. And so you have a meeting of the minds, and that's, putting in an escrow, and that's what pending is. And so as a result, we use this to determine or to feel out the market or to identify whether we have more buyers in the marketplace or fewer buyers in the marketplace than any other previous time, and when we reflect back on those transparencies. So 2,856 is what we had last year, same week, 2,500 the year before. So again, if this is just a first week anomaly, fine. But if it's a first week, hey, you know what? This is sticking around. We're seeing those increases already showing up. 1,216 is where we are so far month to date. We're way too early in the month to pull anything out of the hat. But if you just look at the numbers, you can see other than 2024, look at that. We started off 2024 with a bang, with 2,679 in escrow, but we didn't finish up that well. So let's see. Month supply 6.91. Well, for all of those buyer market fans, you will be able to use this to potentially say we're in a buyer's market last week. So we may not be in one again moving forward. But again, just last week's numbers, supply and demand said we had a 6.91 month supply. Again, the year before that, you can see we were at a 6.15, and the year before that, well, hence that big, pending 3.20. So this is how we can look at these numbers and say, what's going on right now? How does it compare to last year? It doesn't tell us the crystal ball of the future. That's obviously for us to interpret as we move along. And hopefully the information that we give you on the podcast, which I think historically, everything that I've ever said falls in line with what Lawrence Young of NAR comes out with about 10 days after we've said it here. So I think that there's some pretty reasonable information to pay attention to. Looking at the median sale price, which is the bottom number in this red box, we're at 474.9. We were at 475 last week. We were at 450 the year before that. But I think what we're going to see come out of 2025 is an average number, which I'm going to show you later today on when you get that year-end report. I think what you're going to find is that we ended up somewhere right in the vicinity of 450,000. And that just means that the pricing did not take off at all throughout the year. In fact, if there's anything that took place, was a settling of listing prices and reductions in prices. Sellers were not able to get the money that they thought they were going to be able to get. 92 days on market is, on active is pretty brisk. It means the properties that are selling are the ones that are more recently put on the market. Not the ones that have historical attributes to it. List price to sale price retention. How much did the seller keep of what they were hoping to get? 96.67. If you look way over on the left-hand side of the whole column, you'll see this ROT column way over on the left. That's called rules of thumb. And a lot of these numbers on the left-hand side will be, well, what is the 5-year historical perspective for Arizona, the armless market? And so 97.8 is still. Now, I will tell you that this number's been 97.8 since 1998 when I started recording numbers. I don't just go into MLS and use MLS's numbers. These are historically that I've taken throughout the decades. But 97.8 is that actual number. So when we're below 97.8, well, let me first just say 97.8 means that the seller is historically used to giving up 2.2% off the list price to the actual contract price they accept. So the sellers are able to, they give away 2.2%, but the buyers basically negotiate away 2.2%. That's the historical average, 97.8. So when you look at this week's numbers at 96.67, the seller's retaining less. They got 96.67% of their list price. Now, this isn't the original list price. The price that they hoped to get. Well, this is after the dust settles and the listing agents have convinced the sellers, that maybe their house was overpriced a little bit and the price settles. That price difference between the list price at that time and the time at which they accepted that offer. So 97.15 the week before. Last year, same period, 97.63, 97.49 the year before that. Now, these are always will be typically minute changes. When we see a big swing, like a 91% or 105%, what we're seeing is 105 says that the buyers are paying 5% over market. And the 91% would mean that the seller's having to give up 9% to make that buyer buy, to incentivize that buyer. So this is how we use these numbers. Again, I'll tell you a little bit more about this in the year-end reports. But that's what we've got so far this week. So I appreciate you guys hanging in there, and we'll turn it over to Matt.
Awesome. Todd, that was a lot of really good information. I also am just tickled pink that Mike was not here when the numbers showed the buyer's market. And hopefully when we meet the next time, it's below 5, and then we can make fun of him again.